The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, it took a little while into Thursday's trading session, but wheat was able to follow through somewhat from the big move on Wednesday tied to the concerns with the Russia-Ukraine situation. Corn of beans finished today relatively mixed. We had poor export sales. We're going to talk about a lot here as we welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing by Stuart Peterson. Bryan, great to have you on the show again this week. And you made the comment to me before we jumped on, maybe taking a little edge off the bearishness in this market on Thursday, combined with Wednesday's move. Maybe not out of the woods, but at least an okay day when it was all said and done on Thursday.
You know, Jess, if when you sit in a chair like I do and you kind of got your eyes on the market all day long, it's been almost the same story every day, just a different day, and then just a different week. Until yesterday. And yesterday was the same story in the morning, and then prices made a really rapid turnaround, in particular wheat just surging higher, posting a very, very big bullish key reversal on the bottom of a chart trend, on the bottom of a price chart to boot. We've been in a downtrend for a year on wheat prices, believe it or not. Mm-hmm. And so that's encouraging if the trade is looking for a signal, and then you want to see the follow through after that. We got some in the wheat market today, and even corn, had another rough morning, but boy, came back and kind of glided higher. So 2 days in a row, somebody's buying the market when it sets back. So we might be starting to change the momentum. Oversold indicators, stochastic crossover signals. You look at the wheat and look at sort of the things that are maybe transpiring if you want to be friendly. My colleague Brandon here, he pointed out, look at what's happening, with this Russia, maybe this war escalating. They're not real happy about this corridor. What's happened this week? There's some drone attacks, maybe by Ukraine, who knows? But it seems like tensions are getting worse, but also just confirmation of poor crop conditions in Oklahoma, the worst crop in 55 years. Take a look at the winter wheat crop rate. It's not very good. Now, exports aren't very good either, but the world cannot not buy our stuff forever. And maybe it just got low enough now that market clearing forces will start to come in.
Well, and you made a couple key points there. Not only are we watching weather, of course, and with the poor conditions in wheat, but then the Russia-Ukraine situation and some of the other outside market factors weighing in this week. We obviously had the Fed raise interest rates again on Wednesday. Crude has taken a pretty sharp dive here in recent sessions as well. I know it's back up a little bit on Thursday, but I think it hit down around 63 at one point overnight. I mean, it feels like this market overall in the grains, very headline driven, outside market headline driven versus necessarily the typical weather market that we see in the springtime, Bryan.
Well, that's just it. And you talked about the crude oil. Just to put something in perspective, overnight alone, it was down about $5. So it was about 68. So I just run the calculation real quick. 5 divided by 68. Just on an overnight trade here, you had the market down 7.35%. That's crazy volatile. Think about a vehicle or a home or anything changing 7% in a matter of hours, and then it came back. So it's a volatile market. It's trading headlines. I've never seen, and it seems like I probably said this before, but I've never seen such major concern over a quarter point change, and everybody knew it was coming, whether it was going to be a quarter or half or none, but it's a quarter point swing one way or the other, probably from what was expected. That's out of the way. So the market will adjust. worries about economic slowdown are the big overlying factor or underlying factor, however you want to talk about it, in the commodity complex. You got to wonder if it's now starting to be overdone, and the bears have been kind of running the roost here for some time.
Yeah, and I know with crude oil having some concerns, a lot of folks moving to gold. Gold's up about $20 on Thursday. But overall, you mentioned the oversold kind of environment and feel to grains and oilseeds. So thinking risk management, I know a lot of farmers are a little disappointed, especially if they haven't taken advantage of some of the price levels we saw here a few weeks back. So now they're wondering what they should do, maybe depending on their situation. Risk management wise, though, is it smart to try and take advantage of some rally days like we saw yesterday and a little bit today?
It is. The overall trend is down, and on May 3rd or 4th, there is no argument that we're going to lose any crop to weather at this point. And we've had some, major concerns about too dry last year. They're bleeding into this year. Talk to somebody who's dry right now. Talk to several farmers in Nebraska, Western Iowa, crops in the ground, no rain. So they need rain, but we haven't lost that crop yet. You look at where it was, snow and cold and wet, and you're talking 80s in the Dakotas. It's not going to take long for conditions to get ready with that kind of temperature, especially with some of the winds as of late. So we can't really talk about crop losses. So as long as the market's in a downtrend, you talk about recently the market dropped. We've been talking about this slippery slope since October.
Mm-hmm.
And we talked about initially when a market has what appears to be friendly news, which it did into the late October window, and corn futures were bumping up against 7 and bumping up against 7 on the front months, couldn't get through it. And then we drop off, and then we drop off, and the new crop got up to 637, then it drops off. So it's that old, we keep chasing quarters. When it's at 625, we want 650. When it's at 6, we want 625, and it's at 575, you want 6. And then it gets down to 550. We want 570. Now it's 5.25. We want 550. We haven't broken that pattern. So until we do, if you get rallies within that pattern, I would be defensive, but you got to choose the right tool for you. If you don't like these cash prices, then don't sell them, but defend it with some type of a put option or a buy put, sell a call, sell a couple of calls, maybe some sort of fencing strategy that leaves quite a window open for price appreciation.
Yeah, and as you mentioned, a lot of tools available. There's also the we know the short dated options or different things out there. There's so many different tools, and that's why it's important to sharpen that pencil and have that risk management plan in place, and maybe have a couple plans underneath the overarching plan, Bryan, especially during a busy time of year with planting season, and not getting too complacent as you watch the markets right now.
Well, for sure, and it's also it's time to be kind of selfish. And what do I mean by that is contact your advisor and say, hey, sit down, put some things together for me. Tell me what I can do. Give me these options. I've got 18 other things on my mind between planting and moving equipment and parts and everything that spring brings with it. So put your people to work. You manage a lot of things as a farmer, and probably the one thing I encourage farmers to manage most is relationships, and help other people to help you get to where you want to go. And just asking gets you a long way.
Bryan, I should touch on weekly export sales. Pretty dismal again. The corn number, I think we expected that with the previous China cancellations there, but overall, just another pretty dismal week on the export sales front.
It is. It's not a surprise. What is perplexing, though, is China cancels out. And I may have mentioned this last week, but Reuters news service, Karen Brown, I'll give her the credit. She posted the sales of the last 20 years for all other importing countries, and it's the second lowest. So I understand not buying at high prices and buying only as needed, but you're in front of really two weather markets. The Brazilian crop isn't in the bin yet. Our crop isn't in the ground yet. So if you're an importing country or an end user here in the U.S., you've just got some big pullback. We talked about new crop prices basically dropped $1 a bushel. What 625 drop $1 was at 12-15% in that area. You've gotten a pay increase in a sense as an end user. by maybe being patient or buying what you need. But I'm kind of surprised as of late, now that we're down to some levels that have kind of taken the fluff out of the market, that the end user isn't more aggressively buying. So I'm a little bit perplexed why that export market at this time of year is all of a sudden hit a wall.
We are having a conversation here today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing by Stuart Peterson. Bryan, let's look over at the livestock trade. Cattle fairly mixed on the day Thursday. Sounds like cash cattle activity's done for the week already. You didn't really see any new trade develop on Thursday. But I know we've touched on this. This cattle trade, it feels like maybe some recessionary fears still weighing here, maybe just some toppiness in this market too, kind of continuing here this week.
And I would say both. This recession fear seems to be a blanket over a lot of things, and it seems to be worldwide. Um, Going back to the corn exports and sort of our poor export sales, people have to eat. Will they chase beef? I've worried about beef is overvalued compared to pork and poultry. So beef could have its own struggles. It's been a supply driven market, but I wonder if retailers maybe aren't booked up enough right now and are not chasing this. They chased it enough. And that's me guessing this, but I think the backdrop of it from a money flow, traders, they're looking at a cash hog market that hasn't budged much, moved just a little bit up. There's no strength in that market right now, but there's been strength in cattle. And yet you talk about even some tighter hog supplies due to African swine fever elsewhere, due to PRRS here in the U.S., just a lot of things where Smithfield talking over 100,000 sows getting rid of their vertical chain, things that normally drive that market. So I guess where I'm driving with this, I'm beginning to wonder on this whole export front, and maybe the market's peaked in cattle and hogs have been sort of a dog, is just that maybe the world and consumers, they just don't have as much money as we kind of think they do, or we're used to them having in a zero interest environment where they're aggressively buying generally ahead and buying frequently.
That's a great point you make. And I think about this too. And you mentioned how pork, the hog market's kind of been a dog. I thought we found support. Then we had a down day Thursday. But, I was just at the grocery store here this morning, Bryan. And I mean, for a lot of folks, wallets, I think, are getting a little bit tighter with the recessionary fears. And you look at certain cuts of meat, you might be trading down from, say, a ribeye to some other cut of beef, or down to pork, or down to chicken, or even turkey in some cases. I think that is a great point and an astute point, because I feel like that is really starting to catch up with us, especially here domestically at the meat case as we head into summer grilling season. And I think that's going to be something to really watch closely here throughout this entire protein sector, Bryan.
I think there's going to be a lot of stats are going to be watched closely, and I think a lot of it can tie into what the one thing that, well, not everybody, but most everybody uses is energy and gasoline, and how the energy complex quickly dropped out from over 80 after OPEC said they would reduce production. So there's something going on with the demand environment that has the money concerned right now, or the money just simply said, hey, we don't like the uncertainty. We're just going to move to something safer and just kind of stay out. So you don't have those extra dollars buying commodities on dips aggressively. We did see a pretty good, turnaround of wheat yesterday, but at the same time, we didn't see the energy market leading to complex higher. So unfortunately, as friendly as I'd like to be, the wheat market and feel for farmers who've got very poor conditions, you like to see the commodity complex sort of hitting on all cylinders. And one of those big cylinders is the energy complex, and the money flow seems to be more out than in as of late.
And I'll be curious to see how things look on Friday. And you mentioned the money flow out, i.e., going to a safe haven like gold, like I mentioned earlier, gold being higher on the day Thursday. Bryan, how about that dairy market trade? Any notes there for us this week?
Well, dairy and gold have opposite directions. So the gold looks as strong as it can look, a good, strong bull market. Dairy is about as, kind of textbook bear market as you can get. Series of lower highs, lower lows. We still haven't seen any kind of turnaround there. We get little blips and blurps. We had some higher cheese prices yesterday, kind of got the market a little bit let's say, worked up a little bit. Didn't do anything today. Down 7 on the May in the last trade, 6 on the July. Pretty flat. I'm a little worried that the front months. So let's take those. Let's take a look at those two. The May contract 1669, July 1778 are holding discounts $2 or more to the back months. That concerns me. So I'm worried if I'm a dairy producer that we're not doing the things as an industry needs. That is, we need to cut back on some supply to help this thing out. We have done anything but at this point. So that's what kind of keeps me up at night in the dairy industry. I do wonder, and I mentioned this before, a lot of producers have used some of the insurance products, and those have paid some dividends here for first quarter, second quarter. If those dividends run out, what happens from there?
Very, very true. Very, very true. Bryan, well, great stuff. We've covered a lot of big picture things here today. Let's put a bow on this before we let you go. Any final thoughts for us before we run out of time today?
Well, I'll start with this. It's spring, and everyone's just really busy right now. So just, again, keep it safe. It'll get done. So that's the first thing, as I get a little bit more age, the wisdom starts to creep in the sense of, safety first. There is real meaning to that. Safety first. Take care of yourself. You take care of yourself, you can take care of your family and all of that good stuff. I think the big thing to look at here, we might be seeing a turnaround in the corn and the wheat market. So watch those carefully. If we get rallies out of this, see what's behind the rally. If it isn't something really substantive, it's just short covering. That is the funds maybe buying some contracts back. Be prepared to let some of that old crop go, and be prepared to hedge some of the new crop. So I think I'll end with that. Look for rallies to treat defensively until we kind of really think we're moved out of this sort of funk that the commodity complex is in.
Well, great stuff, Bryan. If folks have questions, I know they can reach out to you there at Total Farm Marketing. How can they get a hold of you?
Yeah, they can give me a phone call. Would love a conversation. I'm a bit of a believer in listening and hearing, if that makes sense. I can hear you. I want to listen. I can hear you on a text or an email, but I can't really hear you. So 800-334-9779. Otherwise, emails are great. Bryan with a Y at totalfarmmarketing.com, Jesse. And then just check out our website, totalfarmmarketing.com.
Great stuff as always. Bryan Doherty with Total Farm Marketing. Have a fantastic weekend, sir, and we'll talk to you next week.
Absolutely. Thank you, Jesse. Keep up the good work.
Man, thank you. That is going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.